Hi friends, recently the Comptroller and Auditor General of India has released a report that stated that the Indian fertilizer subsidy has far exceeded than what was actually budgeted for in the actual budget. So let us understand how is this happening and how our farmers are draining the budget even without realizing it. India and its farmers share a very special relationship. From the seeds they sow to the fertilizers they use are subsidized by the government at highly discounted prices. Even when the crops are harvested, the government itself purchases the crops from the farmers at the minimum support price or MSP. If the farmers want to export the crops, then also government will provide many subsidies and support. And finally, when the farmers make money, not a single rupee of their income is taxed. I may have oversimplified the story, but the core point remains the same. The government gives immense support to the farmers monetarily. And it does not come cheap. It costs government a lot. By a lot, I mean in trillions and trillions of rupees. Today, in this story, we will be exploring how the fertilizer subsidy is costing the government. When the last year budget was presented, that is 2025-26, the government set aside 1.84 trillion for fertilizer subsidies. Since the government understood that this amount won't be enough, in between it revised this amount upward to 1.86 trillion rupees. Even then, the latest data from the Comptroller and Auditor General says India's fertilizer subsidy bill had crossed 1.87 trillion by February itself, breaching the revised estimate well before the financial year 25-26 ended. You might think this happened due to a one-time slippage caused by geopolitical events. But you're wrong, my dear friends. This is a reflection of a deeper problem in the country's agricultural policy, which is becoming fiscally costly, inefficient, and unsustainable. Let us understand each of them one by one, but before that, we need to understand how the fertilizer subsidy works in India. There are basically two types of fertilizer subsidies Indian government offers. One is urea subsidy, that is specifically for urea, and the other is for non-urea fertilizers, basically for phosphate and potassium based fertilizers based on something known as nutrient based subsidy. First one, urea subsidy. Urea, as we all might know, is the most widely used fertilizer and it is under a separate subsidy system. Urea is used for its nitrogen content. The government fixes its retail price, that is, the government fixes the retail price of urea and pays the difference between that fixed price and the actual cost of production or import to the manufacturer. For example, urea sells at around a constant price of 270 per 45 kilogram bag in India, even as global prices surged to nearly $850 per ton. In that sense, ideally in India, it should be priced at 3,500 to 4,000 per 45 kilogram bag. So this remaining amount of 3,500 minus 270 of what the farmers pay, the government pays to the manufacturer or importer. So if suddenly the global prices surge to from 3,500 rupees to 5,000, then the government's expense is also increasing. Then there is nutrient-based subsidy. This applies to non-urea fertilizers like phosphate and potassium-based fertilizers. Here, the subsidy is linked to the nutrient content. And no matter what the fertilizer company fixes its MRP as, the government always pays a fixed amount as subsidy based on the nutrient content. For example, government announces the nutrient-based subsidy rates for 1 year. Say, for example, if a fertilizer has nitrogen, then the government will pay 47 rupees per kilogram of that nitrogen in that fertilizer. For phosphate, it is 21. Potash is 2. Sulfur also, it is 2 per kilogram. This is just an assumption. And now, suppose a fertilizer bag contains 18 kilogram nitrogen, 46 kilogram phosphorus, 0 kilogram potassium and 0 kilogram sulfur, then the subsidy would be accordingly calculated based on that per kilogram rate the government set. In this case, it would come around 1,812 rupees. And this amount, no matter what the fertilizer is priced at, the government always pays that same rupees 1,812 rupees. in the nutrient-based subsidy system. The remaining amount has to be paid by the farmers. So tomorrow, if the fertilizer increases the price, fertilizer company increases the price of the fertilizer, the government cost will remain the same because its nutrient content are same, but the farmer has to bear the remaining amount. To summarize, in urea subsidy, if the price of the urea increases, then government bears the cost, and for the farmer, the price remains steady. But in nutrient-based subsidy, if the price of the fertilizer increases, government subsidy amount remains constant and the farmer pays the remaining amount. So what happens due to this price difference or two types of subsidies? Farmers obviously use nitrogen containing urea fertilizer more, and the phosphate and potassium fertilizers, which is based in the NBS, that is nutrient based subsidy system, they use that less. This distorts the nutrient ratio of the soil. Ideally, the nutrient ratio for a healthy soil should be 4:2:1. That is 4 parts nitrogen, 2 parts phosphorus, and 1 part potassium. But due to the overuse of nitrogen containing urea because of its steady, constant, low price, the ratio is now 10.9 parts of nitrogen, 4.1 parts of phosphorus, and 1 part of potassium. That is very high ratio of nitrogen. This high nitrogen content in the soil leads to one, soil acidification, and over time the soil becomes less productive, requiring even more fertilizer to achieve the same crop yield. Two, plants can only absorb nutrients in a specific balance. When there is too much nitrogen, the extra nitrogen isn't used by the plant. Instead, it leaches into the groundwater. Due to the artificially low prices of urea, on one hand, as we saw, farmers overuse it. But on the other hand, even a serious problem happens, that is, it creates incentives for diversion to non-agricultural users of urea. There is also smuggling of urea due to the same reason across the borders. Despite the government using Aadhaar-based sale of fertilizers, as long as the price difference exists between Indian urea and the global urea prices, leakages will continue to happen. As we saw previously, since the government spends trillions of rupees in fertilizer subsidies, even if a small amount of leakage is prevented, that would translate to huge savings for the government, which the government can use for other productive agricultural uses like irrigation and soil. We saw what is the problem. Now, what comes to your mind as the obvious solution? Obviously, to bring urea under the nutrient-based subsidy. But no political party at the center would do it. Why? One, the farmers are a huge vote bank and no government wants to risk losing it. Two, if the farmers realize that they have to pay a higher price for the fertilizers, then they would reduce the usage of fertilizers itself. That would hurt the crop yields and affect the food security of the nation. Therefore, the government keeps on providing the subsidies, maintaining the status quo. What are the realistic solutions? First one is use of technology. There is something known as AgriStack the government is using. It is a digital agriculture platform that helps the government in identifying who the farmer is, where his land is, and what crop is being grown. Secondly, soil health card. It is a government scheme that gives the farmers a report on their soil's nutrient status and recommends what fertilizers and nutrients they should apply rather than blindly using urea. Second solution, realistic solution, is rethinking the way the subsidy is provided. Cheap fertilizer prices encourage overuse, especially in the case of urea. Now that distorts farmer choices and also harms the soil health over time. Instead, raise the urea prices gradually, but compensate farmers through direct cash support per acre of his land so their income is protected. In short, farmer decisions should be based on what the soil actually needs, what the crop actually needs, and what is economically sensible, not on which fertilizer happens to be cheapest because of subsidies. In summary, the real challenge is not whether India should support its farmers, but how it should do it through smarter, more targeted policies that protect farm incomes, preserve soil health, and make every subsidy rupee count. Thank you.